The announcement that North America's largest precious metals trading desk went public earlier today is only one of many factors that have contributed to silver's recent price rise beyond $52 per ounce. During our exploration, we will delve into the current state of silver. I've put a lot of stuff on this platform, and there's just too much news to keep up with. Regardless, it's incredible to see that silver is now trading at record highs, with a spike and explosion of 4.4% today. As I am recording this video just moments before the markets close, the current price is $52.22. I'll fill you in on what's happening with the other metals as well, but we won't limit ourselves to discussing the biggest precious metals trading desk in North America. Major coin shops around the nation are beginning to halt sales. Brian Kusmar just accomplished this earlier today. Commercial Rare Coins and Precious Metals, his company, has temporarily halted all sales of silver. He has never experienced this before, not even in 1980, and the reasons behind this are his inability to hedge, his inability to locate merchandise, and his inability to determine appropriate prices. That's insane. And then he offers some wise counsel that I've been sharing on this channel for quite some time. Avoid selling. I agree with that. People, hold on to your silver. Now is the time to hold. You should also have some of these on hand so that you can hold your silver. If it means having less of these, then by all means, have some on hand. You never know what the future holds. There are pros and cons to these high pricing, which is why I always tell you to compare prices and be informed about market trends. This channel is only one method to get some of that news. Currently, Summit Metals, a bullion dealer, is sponsoring it. They will purchase your precious metals. Nevertheless, they are still purchasing silver. Who knows? Summit Metals is worth checking out when you have a moment, even if there's a lot going on. Feel free to browse their website. Fast shipment and excellent customer service are what you can expect. The description below includes the URL. First, I'll give you the big picture of the market, and then I'll go into more detail regarding the precious metals trading desk's suspension, or shutdown, for the time being anyway. As a result of a new price spike and an unprecedented short squeeze in London, the global search for bullion to bridge the gap between supply and demand has intensified, prompting Bloomberg to claim that silver prices had reached a level not seen in decades. Just a few hours ago, spot silver rose 3.7% above $52 per ounce. Today there was a 4.32% increase, or $2.16 more, to $52.17. Gold has also soared 2% today, up $91.80 to $4,910.20, and it reached a high of $52.26 earlier. The prices of palladium and platinum are through the roof as well. At 1,500 Oz, it's up 5.5%, or 76 today. Additionally, palladium is up over 2% today, reaching 1,630 tries. There's no way. Now that we've covered the topic, platinum and palladium have jumped significantly, and gold is trading at $4,100 plus, continuing its record-breaking run of 8 weekly increases. Quite a remarkable day. Concerns regarding London's liquidity pushed silver closer to its 1980 record high of $52.50 per ounce. Naturally, that is part of the complex of futures. Actually, that wasn't the 1980 spot price. In reality, it never hit $50 during that time. At the moment, this is merely a modest peak. It hasn't been deflated. I should probably remind you of that. There is still cause for celebration, even though silver has a long way to go before it hits that threshold. Based on my conversation with that currency business, something is happening, and it's completely out of the ordinary. Even though the contract is no longer in effect, we can look back to 1980 and see that the Chicago Board of Trade benchmark prices in London had reached near historic heights relative to New York. This caused some traders to reserve cargo slots on transatlantic flights specifically for silver bars, an expensive method of transportation usually associated with gold, in order to capitalize on the higher prices in London. On Monday, the premium was close to $1.60 per ounce. Last Friday, silver lease rates, which show the yearly cost of borrowing metal in the London market, sprang to above 30% on a one-month basis, leading to exorbitant charges for individuals seeking to cover their short positions. The tightening of gold and palladium lease rates indicates a growing bullish sentiment towards London's bullion stockpiles, which were boosted earlier this year when there was a stampede to send metal to New York due to concerns about tariffs. Because silver's market is smaller and less liquid than gold's, price fluctuations are magnified. In a note, an analyst from Goldman Sachs Group Incorporated stated that, in the absence of a central bank intervention to support silver prices, a temporary reduction in investment flows might set off a disproportionate correction. This is because it would also unwind the tightness in London, which was a key factor in the recent surge. Time will tell. For quite some time, central banks have toyed with the idea of potentially having a stake in the silver market. Their actions will be monitored. This year, the four most important precious metals have seen increases of 55% to 82%. In the current commodity market surge, that would be palladium, but it might also be platinum. Federal Reserve rate cuts, increased holdings in exchange-traded funds, and purchases by central banks have all contributed to gold's recent upswing. Frequent US-China trade tensions, challenges to the independence of the Fed, and a US government shutdown have all contributed to an increase in demand for safe havens. Now, China has warned that it would respond if the United States moves forward with further tax threats and has encouraged Washington to return to discussions. While last week he suggested imposing an additional 100% tariff on Chinese imports, Trump took a more conciliatory stance in his remarks over the weekend. Since the shutdown has prevented the reporting of some figures, we may now examine them to see what has been happening. Silver, platinum, and palladium are essential minerals, and traders are waiting anxiously for the results of the so-called Section 232 investigation into these metals. I anticipate that the figures will be released in the next week or two, or that the decisions regarding their addition will be announced later in the month. By then, we'll know if the government is willing to cooperate. Market tightness has been worsened by fears that metals could be subject to additional taxes, which has helped set the stage for a squeeze in silver, following a significant slowdown in the drawdown of freely available supply in London. That being said, it has the potential to be really captivating. On the New York ComEdge, silver futures surged to a new high of $50.56 per ounce, an increase of up to 7%. The prior high, according to an official from the CME Group, the current owners of the COMEX, was $50.35 in 1980. Witnessing this would be a fascinating experience. The reports coming out of the so-called StoneX bullion trading desk are adding fuel to the fire, in my opinion. That is the biggest in North America. According to a number of messages on the X platform, it has been disabled. The biggest metals trading desk is closed, according to Silver Deegan's post. Then we should fasten our seatbelts for the shopping. The number of people discussing this online is growing. Additionally, James Anderson, StoneX Bullion's trading desk, the biggest in North America, has been temporarily unavailable to precious metals investors. This comes as spot prices for silver have risen beyond $52 per ounce, driven up by a short squeeze. A screenshot from the client site shows that the disturbance is complete. No way are you going to make it there. The massive increase in orders that has occurred today is directly attributable to the 3.7% increase in the price of silver. Meanwhile, anticipation of a rate drop and escalating trade tensions in the US have sent gold prices above $4,100. Reduced liquidity might make price movements worse and postpone executions for individual investors in these situations. Remember how the London Metals Exchange had to close its doors in 2022 due to the nickel price spike? It was a similar story. That was the moment when the nickel crush happened. Everything was really insane. That makes me think of this. What we're seeing now is incredible and unprecedented, but it will probably become the standard eventually. There will be a reopening. What transpires here will be observed. What we're witnessing, though, is the creation of history. In a manner distinct from both 2011 and 1980, this is yet another outlier. Everything is different this time. I couldn't agree more. Plus, it's more like what was happening with nickel at the same time in the past. What occurred with nickel was also observed. It also made a full circle. Ours is, without a doubt, a fascinating era. Therefore, the duration of its shutdown will be monitored. Additionally, it's impossible to say for sure. By the time you return to this video, it might even be open. However, my favorite thing to do on this channel is to provide you analysis and news about precious metals. If you like what I do here, I would greatly appreciate it if you could subscribe, give the video a thumbs up, and share it on social media. Now that I've gotten everything out of the way, I want to thank you so much for watching, and I really appreciate it when you hit that like, share, comment, and subscribe button.